everyone, my name is T. I'm on the Vancouver Startup Week team. I would like to take a moment to acknowledge that we are grateful to be virtually gathered on Indigenous land, regardless of where you are joining us from. I'm grateful to be on the traditional, ancestral, and unceded territory of the Musqueam, Tsleil-Waututh, and Squamish peoples. I'm privileged to live, work, and play on these lands. First of all, I'd like to thank you for joining us for VSW 2021 and welcome to the panel discussion of Setting Up for Financial Success, hosted by Sage Accounting. This session is also part of the VSW Founder Track and is proudly supported by Sage Accounting. Sage knows you didn't start your business to become an accountant. Sorry to any accountants out there, but Sage Accounting keeps your business organized and running smoothly. Track your cash flow, send out invoices, and get paid quickly. So visit the Sage Accounting booth to access free guides and templates for starting your business finances the right way. Plus, get an exclusive VSW discount if you're ready to switch from Excel. So thank you again, Sage Accounting, for being our event partner and also sponsor. VSW would not happen without your continuous support as sponsors. Yes, so I'll now pass the mic over to Steve and we'll begin.
Perfect. Well, wherever you may be in this virtual world, good morning and good afternoon. So my name is Steve Rugin. I'm the Vice President of Small Business for Sage Canada. And so when you think of accounting, some people might be thinking of this. And it's the worst case scenario. You might be imagining yourself working on accounting with a lot of tears. Well, at Sage, we help small and medium-sized companies manage their finances, their operations, and their people. So ultimately, you can thrive. Now, globally, we have over 2 million customers. And not only do we provide leading technology solutions, we offer support, real-life advice, and insight that's critical for today's businesses to succeed in such a tough environment. Now, to us, success means you're killing it when it comes to your business finances. Gotta love that cash there. Before we get started, I just wanted to let you know that we're sharing a free guide on the first 5 steps to take when you're starting your business finances and some starter templates. But if you're all ready to upgrade from Excel or switching tools, we do have a link to an exclusive discount to get your first 3 months of Sage Accounting free. So definitely, if you want, take advantage of that. And for all of the things mentioned, you can go to the link on the slide here listed. You can also visit the Sage Accounting booth for the direct link as well. You can see that on the bottom left, I think it is. Now, as the lawyers always have us say, this is not tax, legal, or accounting advice. What you're hearing today is from our speaker's own experience, but every person has a unique circumstance. Make sure you talk to a professional to get accurate advice that applies to your specific situation. Now, today, I'm happy to introduce a very under-discussed topic that really underpins the success of your business: accounting and bookkeeping. But not only in these abstract terms, instead today what we brought together is that we're gonna dive really into what really means for your business and what you need to do to have a strong start. Now, these are some pretty meaty topics. To help me bring this to life for you today, we've invited 2 very special guests. One is an accounting and bookkeeping expert. The other could just be you out there in the audience today, a small business owner who is willing to share his journey and what he's learned along the way to really help provide insight from what he's experienced. So with that, let me introduce you to Anna Abbruzzese. Now, she's a business and software consultant who specializes in office automation and also runs a bookkeeping practice. She's trained hundreds of accountants, bookkeepers, and end users on software and accounting in general terms. Anna is keen on helping finance processes that can streamline your business for today's unique needs in many companies. And she's truly passionate about small business operating at their full potential. So this really means for your accounting software, she really spends a lot of time to help her businesses and their businesses focus on what really matters, which is their business and not just focusing on your books. So super excited with Anna joining us. Now, the second guest that we have is Alex MacCaull. He's the founder of HMS Financial, which is a payment processing company in the insurance industry, and it's based in Montreal. Now, in 2007, Alex left his job as a financial services advisor in Ontario to try a series of contract jobs across Canada and abroad. Now, this included working with PepsiCo in Vancouver, an assistant cruise director at Princess Cruises, and teaching English in Tokyo. So a wide, vast experience here. Then he returned to Canada in 2010, and Alex's first attempt at starting a business was a marketing company with just one client. And it was a motel on the Cabot Trail in Cape Breton, where he actually originally grew up. The marketing company was ultimately not successful, but with all his learnings, he actually used that to create a second business, which is HMS Financial. And HMS, fast forward, is actually celebrating, congratulations to you, Alex, is celebrating their 10th year anniversary. And I think that's coming up in just a couple of days on May 27th. It's reached a sustainable success, and it definitely is going to be growing within the insurance industry and for many years to come. So again, please welcome our two guests. And with that, I'd like to kind of kick this off and start our questions. So Alex, over to you. You know, it's such an incredible journey that you've had so far, and such a wide range from going from a marketing agency all the way to a payment processing in the industry, in the insurance industry. Just wondering if you can share some of your tips for starting a successful business.
Yeah, well, thanks, Steve. And I guess all I can really say is you can start by starting an unsuccessful business first. You got to get started somewhere. I think I told you, as you mentioned, that my first business was a marketing company with a motel as a client in Cape Breton, but that's actually not true. I have a confession to make. There was one before that. When I was 8 years old, I started a detective agency in my bedroom. I had a sign up on the door and everything. So, you know, jokes aside, what I'm trying to point out is that everybody fakes it before they make it. So if you've tried to start businesses in the past and it hasn't worked out, don't despair. That's part of the process as far as I'm concerned. You've got to keep trying. And that's really, the persistence is the key. So on to practical tips. I have two here. The first one is find something that nobody wants to do. Start doing it and then make what you do into a model that you can teach to others. It's really incredible how little effort most people will put into getting basic things done sometimes. And you can see this all around you if you look. So opportunity is everywhere. The other tip I have here is more from a financial perspective. And that is to just make sure to be realistic about how much it's going to cost to start this business, how much it could reasonably make, and how much it will cost to keep it going. If you're going to be doing any borrowing, being able to show these details in a written form should help you to get approvals. And having done the planning ahead of time will help you to keep your business financially on track.
Yeah, those are some great tips. And I like the story about the detective shop that you set up at an early age. I'm sure there's a few learnings that you got from that even at that early age. So thank you for that. Now, Anna, over to you. What are your tips for starting a successful business?
Yeah, thanks, Stephen. Thanks for having me. That was great, Alex. Those are really important points. Myself as well, when I started my business, I started it while I was still employed. So I was working for an accounting firm, a CA firm at the time. Now they're CPA firms. And I thought, like, this is something I think I really want to do. I want to get into accounting software and training. And don't do it alone. I had people help me out. Don't worry about asking for help. Possibly starting it while you're still employed to get off the ground, and developing that really good business plan and a budget so that you can ensure that your finances and the capital that you require are in order right from the beginning. So once you network and research your industry, one of the most important things is just getting the professional help right from the get-go. So get those legal and tax issues right the first time around.
Yeah, I think those are some great tips. I think definitely getting some early advice from those experts are important when you start. So some great tips there, Anna. Thank you. So Switching gears a little bit, and you are the expert in accounting and business consulting, Anna. So, can you share me? We hear this a lot. Can you share, what is bookkeeping all about? And the infamous question is, how does that differ from accounting?
We hear that a lot, and it can be confusing. Not everyone understands the differences. So bookkeeping is really getting down to the nitty-gritty. It's the direct record of all your purchases and your sales and everything that your business conducts. While accounting is more the subjective look at what that data means for your business. So an accountant can be considered a bookkeeper, but a bookkeeper cannot be an accountant without the proper certification and credentials. So maybe look at it as the processing of the transactions for your bookkeeping, and then the subsequent analysis and the forecasting of that data by an accountant.
So I think that really helps me understand, and the rest of us understand the differences between a bookkeeper and accountant. But so how do they typically work together then, like a bookkeeper and an accountant then?
Well, bookkeepers and accountants really have a synergistic relationship. Regardless of the industry you work in, or even your company's legal structure, the bookkeeping and accounting is really vital to the health of your business. So you need one to enter all the transactions, and whether that's yourself as a bookkeeper or somebody you bring in, you need them to reconcile, and then the accountant prepares the year-end taxes and provides financial guidance.
Yeah, it makes a lot of sense how they kind of synergize and work together on that piece of it. So yeah, that's super clear. Thank you for that. Alex, over to you. So, when you're starting a new business, when do business owners typically start thinking about hiring an accountant?
Well, I couldn't speak to everybody's experience because, again, I think it's pretty unique to everybody on a case-by-case basis. But I can speak to mine, and I can say that with HMS Financial, we started doing the bookkeeping all ourselves. It was myself and my assistant when we got started. When our business started to grow about 3 years in, and we brought a third staff member on, we had to make a decision about where to break down the responsibilities. And so we decided that instead of training the new staff member on the bookkeeping, we actually were able to separate that part of the process out, and we engaged professional bookkeepers, which Anna here at Actium Consulting, that's how we got connected. So this was big for us because it reduced the number of responsibilities that our new staff member had to learn. And that made training easier, and it gave us all space to deal with the increased workload that we were getting from our core operations. The other thing is that it's really difficult to train somebody on bookkeeping for a business like ours because most of the tasks are done on a monthly basis. So you don't get a lot of opportunity to practice. When you're training somebody, especially for an entry-level job, they're just getting started, it's much easier if you have daily tasks because they can reinforce what they're learning each day. But if it's only coming back once a week or once a month, you're kind of reinventing the wheel every time. So this is where those professional bookkeepers can really come up big for us. And yeah, I'm happy to say that Anna and Actium Consulting really hit it out of the park with that one.
Thanks, Alex. I appreciate that. That's some great insight. When we've been working together for a number of years, and it's been interesting because we've only met in person once. So we work across the country, and now with some of the tools, it's amazing what you can do. And just as Alex mentioned, people need to focus on what they do best. Sometimes that is bookkeeping, right? So we see a range of clients. We see some startups that really want to do their own books. And so we'll provide the training and ongoing coaching to assist them. And we'll see people often that have no background in it, but really want to learn it. So I have a current client, for example, who's a hairstylist, but she loves numbers and she wants to make everything balance and she likes to see everything reconcile. So she does her own books and she gets so excited every month when things reconcile. And if she has an issue, she has us to lean on. And so you have to look at what works for you. And are you ready to take that on? Are you ready to do that day to day or outsource it out? But I would say that every business really does need an accountant from day one to assist with those year-end taxes and planning, because there's a lot of intricacies there. So unless you have a certified accountant within your organization directly.
Yeah, it definitely seems like a common thread, right? Is, each each person or company is going to have a, is unique. So it just really depends on that person and their company, right? But I think for sure that common thread, Anna, as you said, right, is, compliancy is absolutely critical. So getting that expert advice is very important as well. So thank you for that. Now, Alex, what are the top things that a business owner should do as part of their accounting or bookkeeping process based on your experience that you've had with your businesses?
Yeah, well, for me, before HMS Financial, I did work in the financial services industry, and I also did have that experience working as a consultant for that motel. And so I did get to see some different ways that people solved the bookkeeping problem. And from what I could see, when I first got started, everything seemed to be on paper still, even though this was in the 2000s and we had computers. A lot of people had legacy processes. So we had receipts, we had invoices, we had statements, and we tried to file it all and summarize it in cabinets and manila envelopes. Now that we're digital, if you're just starting your business, you still need to organize your records in one place, but that place can be digital. So set up a repository for your sources and your statements as an agreed upon starting point for your bookkeeper. Then develop the habit of matching as many sources to statements as you can before the bookkeeper goes to do the entry. This is extra work, but keep in mind that doing that is going to make the relationship work in the early stages, and it's going to put you in a good rhythm to get things done over time. This stuff can pile up and you don't want to leave it to the end of the year. Finally, be ready to answer some questions. And this was tough for me. It continues to be tough for me. It's maybe a personality thing. It can be frustrating to go back sometimes and recap what's already happened when we want to move on and break new ground. But I've learned the financial and administrative professionals that you work with are going to be able to do their jobs better if they feel like they can talk to you.
Well, we feel like we can talk to you. Phew.
Good.
But it does, as Alex mentioned, it definitely helps to have a general repository. HMS Financial has always been really, really organized and keeps everything in a Google Drive. And we have a shared Sage system, accounting system that we use. And sometimes, yes, there are some questions, and it's hard when you have to go back and try to remember what something was from a month ago or 2 months ago, sometimes even 6 months ago, something comes up. So Google Drive and other digital repositories are a really great start. But if you have high volume, they could become cumbersome at times. So there's some great apps like Auto Entry that take the automation to a new level. You can digitize everything from documents, sales invoices, expenses, receipts, bank credit card statements, and with just a click on your phone. They have a web page as well that you can upload to, or you can just even email it into the platform. The app then organizes everything, and it stores all the documentation, and it also integrates with products such as Sage Accounting. So you reduce that duplicate data entry and time, and it's one general place where you can keep everything. So I know this often seems like a daunting task. It's so much easier to throw it in the manila envelope and have the bookkeeper deal with it at year end. But honestly, getting your accounting off a spreadsheet and into accounting software and getting the documents out of that shoebox and digitized is literally a game changer. It'll save you hours of time monthly and make compliance a breeze. And it's kind of addictive once you get started. You go out to maybe buy some office supplies at Staples, and before you leave the store, you just take your phone out and click, take a picture of it. And you can get rid of that receipt as long as it's legible. So CRA will accept digitized receipts as long as they are legible and can be stored somewhere that they can be retrieved. So something to think about when you're starting to organize your business going forward.
Anna, you almost make it sound like it's fun to scan and bring in all your receipts rather than put it into a shoebox or what have you. So that's some great tips there. Thank you. So again, Anna, with your years of experience working with multiple clients, I'm sure you've seen a few mistakes here and there. So what's your kind of 1 to 2 kind of top money mistakes that you've seen a lot of your clients run into?
Probably number one thing we see is not separating business and personal finances. So one thing I would definitely recommend is to ignore the call of convenience and commit yourself to creating separate bank and credit card accounts for your business before you begin collecting revenue from paying customers. Doing this right at the beginning makes it much easier to do the accounting for your business, plan ahead for quarterly tax installments, and budget for unpredictable months that may lie ahead, like this past year, right? So a second thing is not planning for upcoming tax obligations. There are potential personal taxes, sales tax, remittances that have to be made, payroll taxes. There could be corporate taxes if you're incorporated, along with other employer costs if you have employees. So you don't want to end up owing the Canada Revenue Agency, the CRA, money and then incurring interest and penalties on top of that right when you're getting started.
Yeah, there's just some good tips, especially the last one. You definitely got to watch your, making sure that you're up to compliance and making sure that you're worrying about not owing the government money and stuff, right? So, Alex, what about over to you in terms of, what are the one or two mistakes that you've had in the past, and maybe even better is, what's the biggest learning that you've had?
Yeah, I can definitely speak to that, Steve. And I was fortunate because I had been a financial services advisor on the other side of the desk before I got started with my own business. I was involved in mortgage applications and even some business loans, some auto loans for entrepreneurs of various sizes. And I really got a sneak peek into, what does good financial health look like? How can I compare this person to this person to this person? And in some cases, they would ask me for advice because I'm wearing a suit. My name card says that I'm a financial services advisor. People would ask me for advice, even though it was one of the first jobs I ever had. So of course, we were trained on that, and you learn a lot when you have that perspective. So I was able to avoid a lot, I think, of the financial mistakes. I will say financial mistakes early on with HMS Financial. And if I could summarize what I saw into a tip, I guess I would just say, bring the same kind of financial discipline to your business that you already bring to your personal life, at least in the early stages. It's strange that some people, there's this disconnect where they'll try and they'll save $2 in the grocery store on pasta, but then when they go to buy a car for their business, they're getting the biggest loan they can qualify for. They're getting all the extra bells and whistles. And there's this switch in their mind that says, oh, well, it's for the business, so it doesn't matter. It matters. There's going to be surprises early on, and every dollar you borrow is going to cost you money. So you have to be really, really disciplined early on. Later on, as your business gets more successful, you have to actually make a bit of an adjustment and get a little bit looser because people are going to expect that from you. And it's not going to come off as a good look if you're scrimping and saving every penny in every negotiation you have. It's going to be difficult to maintain good relationships with your suppliers and with your clients as you grow. So it's a little bit different as you get further on into the success curve, if you could call it that. But early on, be disciplined. For me, it took about 6 years to get to the point where I felt like I could loosen up a little bit, but everyone's situation is different.
Yeah, I mean, just that discipline and being pragmatic about your money and treat it like it's your own for your own business. I think those are some great tips here. Thank you for that. So I'm going to switch gears a little bit, and this one's for you, Anna. So when does a business need to start charging GST and HST? And how is GSTHST calculated and then remitted?
Well, this falls into financial discipline as well, as Alex mentioned, because in Canada, there is a requirement to charge and collect GST or HST once you hit $30,000 in sales or revenue within 4 consecutive calendar quarters. Okay? But you can still register anytime prior to earning $30,000. So if you do register early, you get the benefit of getting back all the GST and HST you pay on business expenses. That's called an input tax credit or an ITC. So as soon as you hit that $30,000 threshold, you have to register for GST or HST within 29 days. Okay. But the big part here is compliance. Okay. Really, really important. You need to determine if all of your sales or revenue are taxable and whether GST or HST is to be charged on them. So GST and HST is a federal tax, and this sales tax is based on the province of supply, and the onus is on you to determine how much tax to charge and when and where to charge it. So this is where you should definitely seek professional advice if you're unsure.
Yeah, that's great advice. I think lots of questions about HST and GST, so it definitely helps. Thank you for that. Now, Alex, about incorporating. So should you consider incorporating? And once you're incorporated, here's the big question that I think a lot of people ask is, how should you pay yourself?
Right. Well, about incorporating, and I hate to sound like a broken record, I feel like I start every answer off with this same disclaimer, but everyone's situation is different. Okay, get that out of the way. We're very lucky because we're in Canada, and here it is very easy to just start doing business in your own name or by getting a business number. I think a big early milestone is that $30,000 HST that Anna was talking about. In most cases, that's going to be a factor in many people's decision-making process. So if this is your first business, you don't know how much you're going to make. Sometimes the simplest approach is the best. Just start doing business. You can always incorporate later if things really take off. On the other hand, if you're more experienced or if your business involves substantially borrowing right from year one, if there's liability involved that's going to involve insurance policies, incorporating could really be worth it. Again, we're lucky that fees to incorporate in Canada are low and the paperwork is pretty straightforward compared to a lot of other countries. I can tell you I've been trying to start a new project in Brazil for the past 3 years, and the costs there are just astronomical. As far as how much to pay yourself goes, well, I guess I'll just lay it out like this. Take a look at what an entry-level employee would be paid in your industry, and then just swallow your pride and pay yourself that much until you are confident that you can pay more. Before HMS Financial, I was paid about $36,000 annually as a financial services advisor. This was some time ago, so things may have changed since then. But that's what I did. I looked at that salary and I set my salary there. And it stayed there for 6 years. Sometimes it was hard to be sure that I should keep going when I saw that my peers were making more. They were getting raises, they were getting health benefits, which is a thing I didn't have in the beginning. But eventually I was able to bring the figure up, and now I make a good living as a primary decision maker at my place of employment. And that's not important to everybody, but for me, it's beyond price.
Yeah, I really like that advice, Alex. That's interesting. It's an interesting perspective because incorporation is such a popular topic. And like Alex, I dislike being vague, but unfortunately the answer always is, well, it depends whether you should incorporate or not, because it depends on your personal cash flow needs and whether you have other sources of income. As we spoke about at the beginning, many people start a business while they're still employed. So do they need the additional income from this side gig, or should they incorporate and keep that money in the corporation and pay corporate taxes instead? You have to justify how you live as well, though. So if it's your only source of income, you can't just leave all the money in the corporation and draw from it. You have to pay some personal tax. You have to pull some money out to justify how you live. So incorporation will allow you to defer, not avoid taxes in Canada, but defer some potentially. However, you'll still have to now file a personal tax return and then in addition, a corporate tax return, which is an additional cost on that. Having a corporation allows you to determine how you'd like to be compensated. So you have a little bit of room here to determine, would you like to pay yourself a salary or a dividend if the corporation is profitable, or maybe a mix of both? So personally, you would have to pay higher taxes on a salary rather than a dividend because salaries are taxed higher. Employment income is taxed higher than dividends in Canada. But the flip side is dividends don't build RRSP room. and they're not eligible for CPP contributions. So if you're looking to contribute to an RSP or the Canada Pension Plan so that you can collect it later in life, a salary is a better option. Dividends also don't qualify for employment tax credits, as well as some other personal tax deductions, such as childcare expense deductions. And we know how costly those can get. So you have to work that in to your situation as well. So these are a few reasons I started my response with. It depends. It's really important to speak with an accountant, and it could change annually. Maybe one year you take a salary, the next year maybe you split and take some dividends. You know, and then you go from there. Maybe one year you lower it. Maybe you need some personal income to show higher because you're going for a mortgage. And so you pull more out of the corporation and pay more personal tax, but you really should speak to an accountant to determine what's best for your personal tax situation.
And thanks for, for that. I think, there are lots of different variables. I think you laid out, some of the different variables. So that's super helpful. And I think, Alex, over to you. I think, by sharing what you did and kind of how you navigated that, I think that really helps us kind of understand what you did and potentially what some of the people on this webcast could do, or at least could consider, right? So, that was great. Now, Anna, over to you. What's considered business income and what are legitimate business expenses?
Sure. So whether you're incorporated or not, business income is the income you earn from selling a service or product. And this could be what we say B2C or B2B. So your business to an end consumer or your business to another business. And so your business income does not include employment income, such as wages or salaries you receive from an employer. Okay, it's strictly from selling your products or services. But you don't necessarily pay tax on that gross income. Your taxable or net business income is calculated as that gross business income minus any business expenses. And you pay income tax based on your net business income. So again, what everybody wants to know is, what are those business expenses? What can I write off, right? After incorporation stuff, next biggest question, what can I write off? So business expenses are any expenses incurred to earn business income. So when claiming business expenses in Canada, the Canada Revenue Agency allows, and this is my favorite word, any reasonable business expense. So to be considered a reasonable business expense, the item has to be appropriate for your business and used in an attempt to earn income. So for example, travel expenses potentially can be deductible as a business expense, but you can't deduct that family vacation to the all-inclusive in Mexico as a travel expense in your business just because you said, well, I chatted to somebody on the beach about the business and he's a potential client, maybe. So I don't think that would fly. But you can write off, say, part of your home office, part of your automobile, if they're prorated based on a percentage of your business use.
Alex, what about yourself?
Yeah, well, I mean, the tax question, as Anna said, is huge, and there's a lot of factors. For us, well, all of the income that the business makes is taxable by the government. That's, I mean, pretty obvious. The one difference in our case is that we don't need to collect HST, even though we are above 30,000. That's because our income comes from loans, which HST is not charged on. So it's an exception. But for most things, if you're selling a product or service, yeah, there's going to be HST that you need to collect and report. And of course, you get to deduct. It gets applied to the HST that you're paying on things, keep in mind too. So that's where HST is, if you're buying things, you're paying HST. When you're selling things, you're collecting HST. Those two accounts are summed and you might not end up having to pay very much. So it's not as onerous as it might seem from the get-go. Talking about legitimate business expenses, well, I guess there's a mentality shift maybe when you go from being an employee to being a self-employed person or a person in charge of a business. As an employee, you might have been thinking for years, what can I get away with? What will the bookkeepers and the accountants let me do? You're going to have to let go of that, in my opinion, if you want to become a successful business owner and make this kind of shift to what actually is reasonable according to the story of this business and what it does on a regular basis. What could I justifiably defend if the spotlight was on me and I had to say, this is part of what we're doing? And at the end of the day, it's the sort of thing where you know what qualifies and what doesn't. I'll give some more specifics to our case. Every year, we produce a business plan, which includes the previous year's financials and a forecast of the expenses for the next year by budget category. So it's pretty easy for us to say that our expenses, when we claim them, fall within the reasonable course of the business as it pursues income, because, well, we have that precedent from the previous year. We can show that it's part of a plan, and we have very detailed records as to where all that money is going and why. So an example of some of these legitimate expenses would include our office supplies, what we pay to rent our office, telephone or internet service, our salaries, dues to professional organizations, charitable donations to organizations that fit within our charitable mission, fees charged by service providers, and travel related to business meetings, when it's related to business meetings.
Exactly.
It's like, yep, that makes a lot of sense. You have to be pragmatic about it, and it has to tie to what you do from a business perspective, right? So what about so here's a question that I hear a lot from some of my friends that run their small businesses, is how much should you set aside for taxes and other costs?
Yeah, well, again, big question. We prepared an estimate before we started operating, and that process of estimating grew into an annual ritual that's an important part of our planning. And I actually still have the original budget. I went back and I printed out a copy of it right here. This is the first one from before we even got started. And it's really fun to go back and look at this sometimes, because some things are very specific and some things are a little bit more vague. Like, we knew what printer we wanted because a big part of our process was going to be digitization right from the get-go. Right from day one, we knew that we wanted everything to be scanned and ready in virtual before we got started. So we were going to need this great big brother multi-function printer that thing's the size of a refrigerator and costs $684.18. Okay, we knew we were going to need that, and we knew how much it cost. But then there were some other things that we didn't really know. I mean, we knew how much checks cost, but how many were we going to need? Our incorporation costs, we did actually know. So what we did, and we went a little bit overboard, but that's what we like to do here at HMS Financial. We created 3 projections. There was the low projection, there was the high projection, and then there was the one right down the middle where we were saying, this is where we think the sweet spot is. This is what we're hoping to hit. And I'm happy to say that we came very close to that in our first year, and it's something that we've continued to do year after year. So yeah, how much do you set aside for taxes? Well, that's going to depend on how much you expect to make, and your accountant can help you with that. As a small business, when you get started, unless you're going to think you're going to be making over $500,000 in your first year, you're lucky because, again, we're in Canada, small business, Canadian controlled private corporation pays much lower taxes on that first $500,000. It might even be more now. I think it might have been bumped up, and Anna can speak to that. But yeah, I mean, taxation, we're lucky. It tends to be pretty low when you get started. And then by the time that you have to start paying more, well, you're in the big leagues anyways, so you should have your act together by then.
That's fantastic that you still have your first budget. I'm sure there's a few blood, sweat, and tears going into that. That's amazing. Kind of related to this is, so I'm sure you learned a whole heck of a lot through the years. So what are some common business deductions that, the business owners on this webcast might not know about?
Well, this is not really my area of expertise. Again, I got to defer more to Anna for that question, but I can say that this year there was a change, and everybody should know about this if they don't. Due to coronavirus, there's been a simplified deduction for work in the home expenses. So the way that this used to work was you had to fill out a form T2200, and you had to come up with very detailed tabulation of all of the different types of expenses that were related to working from the home. And you had to run some calculations on how much of that could be then applied to your personal income taxes. That's all been simplified and replaced with a set amount. I think it's $2 a day up to a maximum of $400, if I'm not mistaken.
Yes.
And so that's just way easier, and you don't need that form T2200. It's just, I think for most people, that's going to be a big one. That's just easy, and it's $400 right there.
Yeah, absolutely. And it comes off as a full deduction on your personal tax return. So you're absolutely right there. And Alex had some great examples there of some business expenses, startup costs, telephone, utilities, referral fees, even if you're paying referral fees to someone to help get your business going, percentage of your home and vehicle. But a few things that you should be aware of that attract a lot of attention from CRA are, one of them is meals and entertainment. So this is a big one that we see a lot with clients who say, well, I was out driving between clients and I picked up lunch. Sorry, doesn't qualify. There have to be at least 2 meals in it. You have to be taking out somebody related to your business. It could be a prospect. It could be a current customer. Maybe it's your accountant, right? But the CRA says you still need to eat. So buying yourself lunch or dinner doesn't qualify. So be really careful with meals and entertainment that it actually is related to business. Travel is another one, as I mentioned previously. It's okay to take maybe your partner, spouse, somebody with you if you're going on a business travel session, but only your portion of the flight and hotel and meals are deductible. So be really, really careful about that, because travel is one they look at very often. Another one that comes up quite a bit is we get a lot of clients asking, well, can't I write off my clothing or dry cleaning? I'm forced to get my clothes dry cleaned, or I have to buy a specific type of clothing. And the answer is not usually. 90% of the time it's no, unless it is logoed and you're only using it for work. It's only a uniform for work. So for example, we've had yoga instructors asking if they can deduct the cost of their fitness clothing or yoga gear. And it's no, because that can be worn outside of work. So if it's only can be worn at your job, then potentially yes, if it's a uniform. But other than that, no clothing deduction, no dry cleaning, no other travel. And one thing to be careful of is what we call capital items. So be really conscious not to expense big ticket items, or what we call capital property. And these are items like motor vehicles, furniture, and they have a useful life of more than a year. So if an expenditure is expected to help the company generate revenue for a longer period of time, you record it as an asset, okay? Something you own, and you depreciate it slowly over its useful life, rather than deducting it fully in the first year of purchase. And the decision whether to capitalize this or not, whether to make it an asset or just write it all off in the first year, is really a critical business issue, because it influences the profit and loss of your business. And in turn, it affects your net worth, your tax liabilities, potentially any debt covenants that you have with lenders. And if the CRA finds that you are just writing off these big assets, they will disallow it. So they'll reassess your tax return, they'll make it an asset, and then your income will become higher, and you'll have to pay tax plus interest and penalties on that. So just be careful about that.
Some really good advice. And with that, it's hard to believe, but actually that was the last question I was going to ask. So, personally, I've really enjoyed our conversation today. I think, to Alex and to Anna, thank you so much for sharing your kind of expertise and insight today. Anna, specifically, your expertise on software, business practices, bookkeeping, and just your pure passion to really help small businesses make you such a great asset to work with. And, I've heard such amazing glowing reviews about yourself, and now even more so I understand why. So thank you for attending today. And Alex, to you, you truly embody that entrepreneur experience, and you can see why your business has been so successful. Again, big congratulations, I think, coming up in a couple of days for your 10th anniversary. You really do have a big kind of applause there, virtual applause for you. But you really do, like, you can really see that you've learned a lot, and you already had a great foundation when you started your businesses, and have learned a whole heck of a lot. So some very pragmatic kind of sharing that you've done with us. So thank you for that. Now, as a reminder, go check out the link that we have listed here, or the Sage Accounting booth. So that's one reminder, as well as we're offering a free guide for the first 5 steps to take when you're starting your books, or a few templates that you can leverage. There is an exclusive VSW discount for Sage Accounting. So if you're ready to upgrade to the next level from Excel, the first 3 months are free as well. So you can take advantage of that. And if you have any questions for our speakers or for Sage, there are a few ways to get a hold of us here. And I think Anna and Alex have their LinkedIn profile, and you can get a hold of them through that way. And if you have any questions for us at Sage here, you can also send us an email here. So again, just in closing, I just want to thank all of you for attending today's session. Hopefully you found it as helpful as I did. And please stay safe and have a good rest of the afternoon. Thanks, everyone.